just business news, we're news for business people. Hello and welcome to Bloomberg Quint Live. You're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Good morning, I'm Agam Vakil. In the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and implications for our investors. But first, the headlines. The Nifty moves back above the 10,100 mark. PSU banks in metals lead the gains. And IRB Infra cracks in trade after the CBI files a charge sheet against the company in the Pune court. Brokerage firm HSBC downgrades the stock to hold. And Cipla is unfazed by the regulatory hurdles faced by its peers in the US. CEO Umang Vohra tells Bloomberg Quint that he expects a quarter of the pharma company's total sales to come from the US over the next 3 to 5 years. And Infosys files settlement plea with SEBI over the severance package for its former CFO Rajiv Bansal. The company admits that it failed to disclose details of the severance agreement as required.
All right, let's take a look as to what's happening in the markets at this hour. Well, some sort of relief coming by. We've seen Nifty and Bank Nifty both recouping their yesterday's loss. Nifty is currently trading almost at day's high, around 10,122, back above the 100-day moving average, which stood at about 10,070 mark, which it breached in yesterday's session, in fact. Bank Nifty is also back above the 50-day moving average and also back above the 25,000 mark. Remember, today is the weekly options expiry day. You'll have the weekly contracts expiring today, so on back of which Bank Nifty will definitely be in focus. In terms of sectoral indices, most of your sectoral indices today are trading in the positive territory, and the gains today are being led by the PSU Bank, and the metals pack also, which tumbled yesterday, has seen a bit of recovery. That's the India VIX, which was just being flashed there on your screen. Nifty Metals Index currently is up almost 1.4%. Let's get back the India Volatility Index. Remember, this has been the concern for majority of the traders. It was trading around the mark of 15 in the last two trading sessions. A bit of cool off, down about 3%, but still trading around those elevated levels of 14.7. The broader markets are also, I think they are outperforming the benchmarks. Let's just pull up. Yeah, both the mid cap as well as the small cap index are trading with gains of almost 1%. Let's also check the advanced decline ratio, which after a lot of trading sessions is looking very positive. It's almost 4:1 on National Stock Exchange. In terms of what's contributing to the gains, we are seeing on Nifty, that's the contribution chart. ICICI Bank, L&T, Maruti Suzuki, SBI seem to be contributing the most. But remember, today's rally is more of broad-based. As you can see, the top gainers are just about contributing only 6, 7 or 4 points. It's a broad-based rally, which is a positive news. And only 3 stocks are trading in the red: Reliance Industries, ONGC, Coal India. So advanced decline ratio for Nifty is almost 47:3, Agam.
Right, in the broader markets, Navneet, as you mentioned, 4:1. That's the exact same ratio when it comes to the breadth in the Nifty 500. And among the gainers, we have strength coming in Ratan India Power, and Himachal Futuristics looking at a little bit of a recovery as well. That's up around 6.7%. We have gains in JBF Industries, KEC International, and Take Solutions also moves back above the mark of 161, currently up as much as nearly 5%. In terms of weakness, as one might expect, we have weakness in IRB Infra. That's down around 5.5% after the CBI has filed a charge sheet. And of course, Jubilant Foodworks has also declined by as much as 3%. Some weakness coming in KRBL, Fortis Healthcare, and Prestige Estates. But on the whole, clearly a day for the gainers, and that's where the momentum is, Navneet.
Okay, that's about the markets. But on Trend Spotting today, we discuss the implications and impact of Bombay High Court upholding the RERA validity with JC Sharma of Sobha. And we put the spotlight on cost pressure concerns for steel makers as we connect with Jatin Damania of Kotak Institutional Equities. And lastly, we discuss what is making the markets move in today's session.
Right. So, let's talk about Sobha. In what comes as a very big positive for home buyers, the Bombay High Court upheld the constitutional validity of the RERA Act and its applicability on the ongoing projects as well. And the law intends to bring in transparency in the home buying process with speedy transactions. and who also proceeds some breather to builders by expanding powers under the Act to grant more time in exceptional cases to a builder to complete the project. But how will these dynamics play out, and will the reality developers' fortunes change? To give us a management perspective, joining us on the show is JC Sharma, the Managing Director at Sobha Limited. So, well, we'll go straight up to the management. Mr. Sharma, thanks for joining us. In the latest Bombay High Court has upheld the validity of RERA. What is your view on the judgment?
See, we have been always for RERA. And we believe that RERA is a reality which the developers fraternity, they have to understand. What the fraternity was trying to do, when you introduce such a path-breaking act which is going to be there for many more decades, why do they bring the ongoing projects where the clarity has not been provided? And that was our fundamental right, which we thought the justice will be done. But if the court decides that at the end of the day we have to abide by the RERA the way it has been drafted, the way it has been implemented, of course somewhere some people will get implemented, but we accept that as part of our business risk. At the end of the day, RERA is going to be a game changer from a customer's perspective. The kind of losses which they have suffered, they need not suffer anymore going forward. And from that perspective, the RERA brings some kind of sanity, some kind of a mechanism where developers can be regulated in the larger interest of the sector. We welcome that.
Sir, the developers have been given some sort of leeway in the judgment by permitting the state-level RERA authority and the appellate tribunal to consider delays on a case-to-case basis and not to cancel the projects of the or the developers' registration in certain cases. I'm sure it's a positive development for a company like yours. Could you give us your take on this?
See, we have not been impacted at all. Whatever RERA had decided and what the government of Karnataka wants, or government of Kerala, government of Gurgaon, that Haryana or Maharashtra, for us it matters little. We believe that we are giving our projects on time. We are likely to deliver our projects on time. We try to follow right in any case without RERA, whatever is good for the customer, those best practices. So we have not been impacted at all with the judgment at the company level.
Well, Navneet, you know, over the past couple of months, what we've also noticed is that the housing finance companies, the demand for them has been going down. This is because of the fact that we've seen a little bit of slackness in demand for realty as well. So if I can go back to, you know, the management, Mr. Sharma, we have seen some amount of weak demand, at least in terms of sentiment. So I actually want to know and understand whether or not you are seeing an uptick in at least inquiries as far as your own company is concerned.
See, as far as we are concerned, our first half results, it is there before you, operational and financial, and we have done reasonably well in these tough environments for the first half. And we have also communicated to the market that our second half will be better than the first half. 2 months have gone by in the third quarter, and we believe we are well on course to do better than what we have achieved in the last financial year. As far as the industry segment is concerned, we have to accept that the industry has been grappling with multiple challenges. Right? It was demonetization about a year back, thereafter it was RERA, and thereafter it was GST. And these three things have impacted the economy as a whole and our sector in particular. And because of that, with this kind of an order what you are talking about, which has been delivered, if all the ongoing projects which have been delayed, if they are being brought up, and on that the kind of penalties and the kind of risk they are going to have, I do not know whether by law things can happen where the developers do not have the required liquidity. But okay, it is between the developers and the government, it is their job, they will be doing. From my perspective, what I believe that even though today the interest rates have remained the same, but the cost to the customer while borrowing now, it has come down. Cost to the developers while borrowing, it has come down. And thanks to the challenges, the new launches, they have reduced significantly. At the same time, with affordable homes and with the Pradhan Mantri Awas Yojana, The sector has been given great benefits. At the end of the day, all such things, with economy now also for the last quarter doing relatively better than the previous 5 quarters where economy was declining, I get a feeling that in coming 1 or 2 quarters, even our sector also will show as a whole the reversal in the demand pattern and it will start showing better volumes. That's my take as far as our sector is concerned.
Okay, while weak demand remains a concern, could you tell us for Sobha, what's the unsold inventory value at the moment and how much time will it take to liquidate that inventory?
See, I was carrying an inventory of 250,000 square feet as on 30th of September 2017. And by the end of 31st March 2017, it will reduce significantly. We do not carry any risk whatsoever as far as the finished stock inventory is concerned, or no consequences whatsoever because of the income tax department, as we hear, right, trying to get some rental benefit from the developers against the unsold stock, which in our view is not proper and against natural justice. But that is a separate matter. As far as Sobha is concerned, it has no problem. Rather it is going aggressively with the new launches from this quarter onwards.
Mr. Sharma, speaking of new launches, in the second quarter you launched 5 new projects. Can you give us updates on those and perhaps tell us a little more about launches which are on the cards?
See, what we have already launched one HRC Pristine, Sobha HRC Pristine in Bangalore, 8.5 acres of development, 8 lakh square feet in the North Bangalore this week. Then we are also planning to launch a couple of projects in Chennai, one project in Trichur and one more project in Mysore. So these are the 5 projects we are planning to launch in this month. Some project may go to the next month also, but that is what we are doing. But net, every quarter you will see 2, 3, 4 launches from Sobha in the next 4 to 6 quarters.
Okay, Mr. Sharma, things are looking good for your company. We've seen the stock price moving up. Your cost of borrowing has been coming down, which is a positive news for the company in terms of the balance sheet. But tell us, what more can one expect in terms of changes in the next few quarters?
See, we were less than 10%. This quarter also the trend continues where every quarter we have been reducing 20 to 30 basis points, though the Reserve Bank and the banks are not doing the same. There is still a scope for at least next couple of quarters for us to reduce our rate of interest. Thereafter, we have to be the part of that macro environment. But these interest rates in my 17 years with this sector, they have been the lowest rates as far as developer fraternity is concerned. And we believe this is a good sign. And going forward, I don't foresee significant increase in the interest rates.
Okay, Mr. Sharma, thank you for joining us and giving us your perspective and perhaps the outlook on Sobha and developers. But I just want to bring up the consensus, the Bloomberg consensus, that is, we have 78% of the analysts on Bloomberg. That is 14 of 18 analysts who have a buy on this particular counter. And while the price target is largely around these current levels, the price target is around 547. There are only 2 analysts with a buy and a hold each. So the street, of course, is largely positive. We'll just have to wait and watch whether or not we do see a revision when it comes to its price target now.
And this is a company actually which is outperforming if you compare it to the other companies. As he said also, the kind of timeline that he's given, for his unsold inventory, that's quite encouraging. And Sobha, as you can see, the stock price movement in the last 12 months, the stock's more than doubled, up almost 120%. It's up 1.5% in today's trading session. Let's switch focus from the real estate space and talk about the metal space, which was under pressure yesterday when we did see the commodity prices crashing on LME and also in China. But specifically iron ore prices, they have been on an upswing for the past few days and are on course for their 5th straight week of gains. The worst hit as a result of this are the steel players. What sort of impact are they going to face? Nikki Mirchandani is here with more details on that. Nikki?
Thanks, Navneet, for that. Yeah, the steel makers have been under pressure for past 10 days. Today, it's been a comparatively good show that should be looking for these companies. But if you see the trend that is playing out, iron ore prices have been on the up move. Now, these prices, the key raw material for producing your steel. So, obviously, these companies will tend to take a hit if the prices go higher. If you look at the 10-day trend that we're looking at for iron ore prices, that's a good 17% jump that you will see for China iron ore prices, whereas if you compare the underlying commodity, that's the Shanghai steel rebar, you will see the underlying commodity just rising as much as 5 to 6% for that matter. So that's like way too low as compared to your raw material prices. Iron ore prices are set for 5th consecutive week of gains for that matter, and Shanghai steel prices, as I just mentioned, has registered gains of around 5%, and today also they have been correcting. However, the worst hit amongst this of all the steel stocks that we're looking at would be JSW Steel. If you look at the trend that has been playing out past 10-11 days, I'm not talking about this day particularly because we've seen some gains coming in for the counter, but then the hit has been the worst, and probably the stock has registered the longest losing streak right since June 1997. And also the reason, primary reason for this is that the company has been purchasing iron ore from the open market and doesn't have its captive resources, which is the case for all the other steel makers, and hence they are seeing a comparatively less impact on this rise of key raw material. Now, JSW has annual capacity of 12 million ton and it requires iron ore to an extent of 22 million ton for running this capacity. If you look at the chart in the 10 days, JSW Steel has almost fell as much as 10%, and whereas all the other players, be it in the like of Tata Steel for that matter, JSPL, SAIL, they have fallen as much as 5 to 7% for that matter. With this, we'd like to bring in our guest, which is
hang on, I think, Nikki, before we go to our expert,
I have a question here. We'll go to our analyst and get a better view on that. You were just mentioning for a 1 million ton steel plant, you require 2 million ton of iron ore. Correct me if I'm not wrong. Okay. So for JSW Steel, I guess the majority of the capacity is in Karnataka, right?
Right.
Okay. And there was that iron ore ban in the state of Karnataka. I don't know what the current status is, which essentially means that they've been importing iron ore for their requirements, and they've been impacted because the prices globally have been going higher.
Correct.
Okay, so what sort of an impact can one see in the earnings to come by in terms of EBITDA per ton? Because I remember that was impacted in the last 2 quarters as well for JSW Steel, solely the reason being because they don't have the captive requirement for it.
Sure. So we are expecting to see cost inflation pressures having an impact on the EBITDA per ton. However, the iron ore prices, if you see, they might just correct anytime soon, given the trend that we are looking at, given one of the private miners is now given a lease to operate the mining. So we can expect some kind of supply coming into the market and the price easing from that level, at least domestically easing from that level thereon. But then again, it remains to be seen how the EBITDA per ton or how the operating performance of the company plays out. With that, I think, Navneet, we can bring in to our guest to the discussion, which is Jatin Damania, the AVP Research, Kotak Institutional Equities. Hello, sir. Nikki here. The first question that I have for you is, we've seen raw material expenses have risen more than the underlying commodity prices. All the steel makers in the last 9 to 10 odd sessions have seen some correction, but JSW Steel particularly has seen more losses coming in. Could you explain what explains this free fall for this counter?
See, I mean, that's basically is happening because of two things. One, the steel prices have been corrected globally. And secondly, we have seen the increase in the raw material prices, iron ore. But I guess it's a good level for an investors to invest into the stocks at the current level, because we believe that with the rise in the iron ore prices, the steel prices are likely to inch up higher from the current level as well. And all the domestic makers, steel makers, will try to pass on the increase in the raw material prices in the coming months as well as in the coming quarters.
All right. The second question I have for you is with regards to the iron ore prices correction. Now, if I believe iron ore prices look set for correction, given that Odisha Mine Department has extended the lease validity for iron ore mines held by Jatin. Is that correct?
Yeah, so as per the media report, definitely the lease of Sarojini mine has been extended. So, I mean, say if you look in the month of November, late November, there was a news that all these mines will go out of the system for a temporary period. And because of which we have seen that NMDC have taken the price hike of absolute, I mean, in the absolute numbers, the highest price hike taken by NMDC in last 1 year. But we, as you have said earlier also, we don't feel that this price will be sustainable, and we are seeing probably a downward revision in the iron ore prices by NMDC in the coming months.
What you're suggesting is there is no more scope left for NMDC to increase prices going ahead, because according to you, they could come down?
Yeah, so we are not expecting only in the domestic market, also in the globally, because if you look Vale and everything, so they can probably, if you want to bring higher prices, they can also increase the supply. And we are anyways forcing about 50 to 100 million ton incremental supply coming from the global three players. Besides this, the increase in the domestic supply, both this thing will lower the iron ore prices for NMDC lower.
How much of a reduction do you foresee in the coming months or quarters from NMDC?
Well, probably 100 to 200 rupees per ton of the reduction can be easily foreseeable in the coming months.
All right, Jatin, I have a little broad question for the sector as such. We've seen a cap on iron ore mining in Karnataka also, which is leading to the acute shortage in the iron ore supply for the steel companies. Do we expect the judgment in relation to the cap of Karnataka mining case anytime soon?
Well, as of now, it's difficult to say, because even we are waiting for the judgment to come. It will either come in the favor of the company, because definitely the cost of the production for the company operating in the Karnataka region are going up. But then it's better to wait for the clarity from the court before commenting anything.
All right, Jatin, the last question that I have for you is with regards to the company's JSW Steel capex plan. Now, if you see, the company has committed substantial portion of its investment towards this capex plan and is looking for an integrated steel mills, and with that is expecting the iron ore supply to come and the cost of production to come down. Could you validate for us and explain us the implication of this?
Yes, definitely company is looking for an expansion, and they want to increase their market share as well going ahead, because we have seen majority of the players who are there in the NCLT are operating at the lower capacity. So it's giving a good room for the established players who have a huge balance sheet to expand their capacity and grab the market share. So it's beneficial. And going ahead, since we have a negative outlook on iron ore, definitely declining iron ore is an benefit for JSW Steel. So that's the reason I said that probably the JSW for investors, it will be a good level to accumulate the stock at the current level as well.
So finally, if you were to stack up all the steel companies in India, what would be your most preferred bet currently as things stand right now?
So it will be Tata by JSW Steel.
Okay, Jatin, thanks a lot for joining us today, and thanks a lot, Nikki, for taking us through that very important update. I guess JSW Steel has snapped its biggest losing streak in last 2 decades is what I was reading, Nikki. So some sort of bounce back seen in the metal stock alongside the recovery which one has seen for the markets as well. Let's just quickly relook at the markets and see what's doing well today. If you could just pull up the stock of TT Limited, that's up almost 13% in today's trade, and if you go by the volumes, I guess the stock's gone up on very high volumes. On National Stock Exchange, almost close to 3 lakh shares have been traded vis-a-vis only 21,000, nearly 21,000 which were traded in yesterday's session. And not only that, I've been observing Shalimar Paints. That's the other counter which is active since the morning session. Shalimar Paints will come up on your screen. That counter has seen gains of almost 11.5%. Pull up Bank Nifty, a bit of cool off has been seen for that counter. It's just around the level of 25,000. Just want to remind our viewers, you can expect a bit of volatility when it comes to this benchmark, considering today is the weekly options expiry day. And Agam, the options data was suggesting a range of 24,500 to about 25,000 on the upside, but there was some bit of call writing which has been seen around the mark of 25,000, 25,100. Remains to be seen if the expiry can take place around these levels.
Well, but no doubt of stocks which are making 52-week highs right now, because I'm looking at case IRC International, that's gained considerably. We're looking at Den Networks. Den Networks is going from strength to strength, and Maruti Suzuki and TVS Motor Company as well. These are probably lifetime highs for some of these companies. So we'll be watching out for these, and whether or not something like a Maruti can eventually even move the needle for something like a Nifty 50.
And Maruti and TVS Motors in the auto pack clearly have had a great
Absolutely.
2017.
Yes.
Okay, then let's move on. What is moving the markets today? We've discussed a couple of stocks, but Yash Upadhyay joins us with more details. Yash, over to you.
Good morning, Navneet. So, as far as the top gainers are concerned, in the broader market, Wiesmann Forex is up 4% after Girik Wealth Advisors bought close to 0.6% stake in the company, about 70,000 shares at a price of 1,399 rupees yesterday in a bulk deal. Shares of rice manufacturers were also buzzing in trade today with the likes of Kohinoor, Dawat Foods and Chimanlal Setia all being up. LT Foods in particular is up about 13% on the back of news that Bangladesh will import close to 150,000 tons of rice from India at a price of about 440 rupees per ton. L&T is another stock on our radar. Now, it has come off from its day high of about 5% and is sitting at gains of about 2.5% after the company said that its hydrocarbon engineering arm has won an order worth close to 1,600 rupees from HPCL. Moving on from the top gainers, on the losing end, we have IRB Infra. Now, this one is down close to 6% today after CBI filed a charge sheet against the company over the illegal purchase of government land in Pimpoli. Also, we have Pokarna Limited. Now, this one is down about 9.5% today on the back of poor results. Right from its revenues to net profit as well as margins all came in lower on a year-on-year basis. And lastly, a couple of buzzing stocks in terms of their volumes is EIH, volumes coming in as high as 46 times the 20-day average, and Sanofi India with volumes as high as 35 times.
Thanks for that, Asha.
Sorry, Agam, I just want to pull up the intraday chart of IRB Infra. Remember, that's the counter which has been under pressure post that news came about. But as you can see, there's been some intraday recovery happening in IRB Infra. It's also there in the futures and options market. So currently down 4%, but off day is lower, Agam.
Right. I was just taking a look, and that's the exact stock that I wanted to address as well. Of course, we'll be watching out keenly on the developments with respect to IRB Infra. But with that, it's a wrap on this edition of Trendspotting. Up next is Hot Money. Stay tuned in a Bloomberg Quint.
Are we live?